Hey, good afternoon, everyone. My name is Mark Sachs. I'm with Right Line Trading, and I thank you so much for coming this afternoon. I'd like to show you our Renko trading system. Today, we had 2 out of 2 trades that were winners at $500 in profit. And I'll show you exactly how the system works. It really gives you amazing trades. You can use it to day trade or swing trade. Works on futures, forex, or stocks. Now I'm just going to hold all the questions until the end. And so, type in your question, and then as soon as the slide presentation is over, I'll go and I'll answer all the questions. So we're at www.rightlinetrading.com. Our email address is info@rightlinetrading.com. Our phone number is 786-713-5276. This disclaimer, which we have to read, is that all signals and trading opportunities provided both orally, written, or electronically that are disclosed are for educational and demonstration purposes only. We take no responsibility for participation by visitors or subscribers within the futures or forex or stock markets, nor for any profits or losses that could be incurred. Careful consideration of your financial position should be made prior to trading. You have the possibility of risking a substantial amount of money. Therefore, the participation in these markets is not appropriate for everyone. Now, again, just a little bit about myself. I'm a graduate of the University of Pennsylvania. I'm a former professor at Jefferson College in Philadelphia, where I published close to 15 peer-reviewed articles in top-tier journals. And I've been involved in the financial markets for over 20 years. And Right Line Trading software is the product of over a decade of analysis of price action, market structure, and indicator algorithms. The software is based on mathematical modeling of closed systems utilizing multivariable equations. And we're one of NinjaTrader's fastest growing software systems. And mathematical modeling can be used to apply to any closed system. When I was in graduate school, I used it. I applied it to underwater decompression schedules, working with the U.S. Navy to optimize deep dives. Determining what kind of oxygen mixture divers were going to breathe, and how much they were going to stop on the way up to allow the oxygen and nitrogen in their blood to equilibrate as they came up from a deep dive. It had never been done this way before. It had only been done via trial and error, and divers would fairly routinely, from very deep dives, get the bends. So we've applied the same type of mathematical modeling to develop our software. Now, our Renko trading system, I believe, will be unlike any system that you've seen in the past. It gives you precision, exact software-generated entries that will actually do work, and they work with a very high degree of accuracy, and were used by very many funded top-step traders in our trading room. We have 150 traders in our trading room. Now, the system was created, as I had mentioned, via the use of mathematical modeling techniques, which are really computer-driven algorithms. And this is the science that was used to create software that is generated to predict the future movement of price in any financial market, on any stock, on any financial instrument. This is the same way that Google and Facebook, any big tech company, uses to create new software. Now, the stock is the software works on futures, forex, and stocks, and all indicators have forward-looking ability. I mean, what we want to do is be able to determine where price is going to move. We don't care where price has been, and that's what the value is of most indicators. They lag price. Our indicators don't lag price, they lead price. Because the only thing we care about is where price is going to move out into the future. We already know where it's been. We don't need an oscillator or a MACD to tell us where price has been in the past. We only care about where price is going to move out into the future. Now, the type of bar you trade, I think, does make a difference. And for a long time, I traded range bars. And what I like about range bars are they don't stop forming when there's a given unit of time, as time bars do, and they don't stop forming after a given number of ticks. They only stop forming when the size of the range bar, if it's a 5 range or a 10 range or a 20 range or even a 40 range. It's based solely on market movement, and you can see how range bars break up price. Now here's the same time on an optimized Renko bar. And you can see that it smooths out price action, and it really gives you a great idea of who's in control of the market at any given time, the bulls or the bears. Now, there is a weakness for Renko bars. The first is that they obliterate price action. And I am a price action trader, and I believe it's really important to be able to evaluate Japanese candlestick patterns. And to give that up took a lot. Like I want to be able to see when there's an engulfing candle, a dark cloud cover, a piercing candle, a doji. I mean, they do tell you from bar to bar who's in control of the market. You also cannot discern a rising and falling triangle, channels, consolidation, any of the price action structural patterns that we use to determine who's in control of the market. So in order to give that up, it required us to develop really powerful leading indicators to signal an entry. Now, the strength of a Renko bar is that it filters out noise. And that's a lot. And along with powerful leading indicators that signal an entry, they do create vastly superior trading opportunities. The thing is that each market has to have the Renko bar individually optimized and it's based on the volatility of the instrument. And that's what keeps us trading opportunities so great. Now, let me give you an example of 2 full system entries. Now, it may look like a lot, and the chart may look really daunting, but I will explain to you as we move through this talk exactly what everything means. But what you have here is a system-generated oscillator entry that's confirmed because order flow, stochastic, and momentum, which is a multi-time frame assessment, which is shown by the blue halo of the candle, and the correlative markets that are important that are also going up at the same time this instrument is going up. They all confirm that this trade is going to rise. Also, the background color makes a big difference. So we're going to go into all of these things. The line it's trading off of is the session open. It's a pivot. This is the previous session close. It's a great trade right off support on an oscillator generated entry long. Now this is I believe the E-mini. And here is a Forex pair. Now, this is a long entry signal right here, this flat line. We had a long trade here and a long trade here. Again, dual dots confirm the validity of the entry. The background bias is green. We're going to learn that what that's all about. Both these dots also confirm the trade in these three green lines. And this is a very, very low risk, high reward trade. It's 131 ticks. And it wouldn't make any, actually in this case, pips. It wouldn't really make any difference whether it went 131 pips or 15 pips or 20 pips. All that mattered was that the opportunity to enter the trade at this given price was very low risk and associated with a potentially high reward. That's all really that matters. I could have showed you a 15 tick trade or an 8 tick trade or an 8 pip trade. That's what all of this represents. That this opportunity poses to you very little risk and the potential for a lot of profit. Let's break it down and take a look. Now, the first is the three, we call this the 3-line indicator. And the first line is the multi-time frame assessment of momentum. The second does a multi-time frame assessment of stochastic. And the last line does a multi-time frame assessment of order flow. Now, what makes these forward-looking indicators is that they don't look at price on your trading chart. They look at the two higher Renko time frames or multiples, and I'll show you exactly what that means. Because the first line we're going to look at is order flow. Now, if you get into trades and you're getting stopped out, and you make money some days or you don't make money others, this is going to be one of the reasons. Now you can see that, I'm sorry that this line is blurry, or this number, but that's the market delta of this candle. It's 2985, it's 2,985, and it's green. And what that tells you is on the dome, there's a large predominance of buyers versus sellers. There are more traders looking to buy than there are traders looking to sell. So there's buying pressure during the formation of this candle. Now, some software that does order flow tracking will put a lot of relevance in the bid-ask disparity in each tick level. You know, the number of traders on the bid side versus the number of traders on the ask side. But we don't believe that has any validity. At least I don't think it does at all. All that matters is the delta of the candle. Now the problem is that sometimes the delta will not call the appropriate direction of the candle. Here's a positive delta with a down candle. I mean, there's a predominance of buyers, a small predominance of buyers on the bid side, or on the ask side actually to buy, but the candle still closes down. So how does order flow tracking help you if the delta doesn't always predict the direction that the candle is going to close? And this is how it works. What we look at now, this is a chart of just the delta of a whole series of candles. And what you can see is that if you simply graph the absolute value of the delta, it's going to give you no predictive value looking out into the future. Yet order flow is a very, very important parameter, and it should be factored into your trading because it is a potent force in determining how price is going to move out into the future. So what we do is this. We've calculated that one standard deviation's worth of market delta values close in the direction of the candle. So a standard deviation's worth of data is correct. So the only thing that we have to do to make this calculation relevant is eliminate the outliers that fall outside that one standard deviation's worth of data in the edge of that bell-shaped curve. And here's how we do it. First of all, we do not look at the delta of any candle of your trading chart. If you do, it doesn't have any future predictive value. We only look at the candle on the 2 higher multiple Renko charts. So if you're trading a 2 Renko, it's going to look at the 4 and the 6 Renko chart. And it takes the candle of each delta and it places those values into a 15-period simple moving average. When both 15-period simple moving averages are sloping up, the 2-time and 3-time Renko multiple charts are longer term time frame charts, then your order flow line is green. And that's going to show you with great precision that there's buying pressure in the market. When both 15-period SMAs are sloping down, it's going to show you that bears are firmly in control, and that order flow line is going to be red. When the 15-period SMAs are not in agreement, the line will be yellow. Now, here's what happens. It's an indicator that leads price. It doesn't make any difference what this financial instrument is, and it doesn't matter what the Renko size is, i.e., the time frame here is irrelevant. And that's why I removed it. When you see price fall here, this is the order flow line and the 3 line, and we're going to put it all together. But you can see that the order flow line turns green before price rises. It's looking at the 2 higher Renko timeframes. It's not using any of the data from the trading chart. And when the order flow line turns green, it means that bulls are firmly in control, and this gives you an absolute direction that you have to trade. The only direction that you can trade here is long. If you try to counter trend trade the direction of order flow, you're very, very likely to be stopped out. Eventually, when both 15-period SMAs go red or start sloping down and the line turns red, then you can take a trade short. Here's the same thing again. It's going to lead price, and it's going to call this turn. Once price starts up, the only direction that you can trade is long until the order flow line turns. If you try to counter trend trade the market anytime in here, you're most likely going to get stopped out. And the goal of every software package that you use to help you trade is to reduce risk to as little as possible. And I always ask traders in a webinar, what's the goal? What is your goal as a trader? And it's obviously to make money, but how do you do it? And the goal is not to get a winner. The goal is to avoid taking a loser. Every trader, even the ones that bust out of the market fast, get lots of winners. But what they wind up doing in the course of trading is they pull in a ton of losers. As we move through the system, you're going to see that our goal is not only to get you winners, but the goal is to really make it really obvious when you're going to be taking a high risk trade. Therefore, our goal here is to allow you to sidestep losers, which I think is much more important than getting a winner. And that's called trading with specificity. Now, again, this is just another bigger view of trading in the direction of order flow. When there's buying pressure long, when there's selling pressure short, when you have yellow and those two 15-period SMAs are moving in opposite directions, not to trade, and stay in the direction of order flow. It also will help you define chop. And as we move through the different forces, you're going to see that it's going to get easier and easier to avoid chop and only take a trade when the bulls or bears are firmly in control of the market, and you get an absolute direction to trade. We've talked nothing about getting an entry, only about the direction that we have to trade. Now, the second force that governs the future direction of price is momentum. And we use a MACD to assess momentum. And you can use momentum or assess momentum a number of different ways. We used Heikin-Ashi momentum for a long time. And then we did an assessment of the MACD, and we found it to be more precise. Now, our MACD assessment is a little more complex than I'm going to tell you, but it's really not much more complex than this. It's pretty straightforward in a way. And what we do is we look at the slope of the momentum line on a MACD on the two higher multiple unit Renko charts. And when the momentum line is accelerating away from the signal line, or actually it's the MACD line accelerating away from the signal line on both higher multiple unit Renko charts, the momentum line is green. When the MACD line is accelerating towards the signal line, then that momentum assessment line is red. And when the momentum lines are not in agreement, then it's yellow. So now we have two forces, order flow and momentum, which must be in alignment in order to take a trade. Now we're trading with more and more specificity. We need more things to align in order to take a trade. It gives more power to the direction we're going to trade and allows us to stand aside easier when the market's in chop. And now we need the top line's momentum, the bottom line is order flow. We need them both to be in concert. They either have to both tell us that a short trade is the way to go. They have to both tell us that we need green, green, or red, red for us to take a long trade. And again, they're going to turn before price turns to predict, to give us the direction that we have to trade. Here's another example. Now it's easier to discern chop. When you don't get red, red, or green, green, it's easier to stand aside. And when we add the third line, you're going to see how it's very easy to stand aside. When they're both when they both are pointing in the same direction, using completely different calculations. You trade short, red, red. You trade long, green, green. Here's another short move, and here's another long move. This is just the direction. So now we add then here's another example. Now, if you want to swing trade, if you want to trade options, you're going to get a precision entry on a stock as long as these lines are green, green, and you only have to check them once a day or every 4 hours. If you're taking a long-term swing trade, as long as they remain green, green on a long and red, red on a short, you can stay in the trade. As soon as they change, you're going to bail out, and it can keep you in the trade for a long period of time. And it's always going to get you in the trade in the appropriate direction. Now here it's easier to see chop. And what we're looking at would be the entry here on every pivot. Now, we haven't discussed entries, only direction to trade. And when they do line up, when you get an alignment of both of these forces, you know the only direction you can trade is short. Now these traders who are going long here are the traders that are trading oscillator divergence, MACD divergence. They're trading Fibonacci, which I'm telling you, we've done a mathematical assessment, does not work. They're trading something that's telling them that this market has made a bottom here and is now going to go long, but it's not. And if you chase the market up, all it's going to do is roll over on you short, and the direction to trade always is to the downside, as long as these two lines are both in alignment to the downside. That's where your money is. Now, the last force that's calculated in this particular indicator is stochastic. And these are equal forces. They're independent, each an equal independent variable. Now, we look at the stochastic indicator only on the two higher multiple unit Renko charts. It's important that the assessment we do has nothing to do with price on your trading chart. If price on your trading chart, if any of the inputs of price movement from your trading chart goes into this assessment, it makes it a dependent variable. Because if price on your trading chart rises, it's going to help this indicator turn green. We don't want price on our trading chart in this assessment. We want to make this a completely independent assessment of price on what we're looking at to trade. Now, when both stochastic lines are overbought or greater than 80, we always believe that the bulls are firmly in control of the market. And so the stochastic assessment line is going to be green. When both stochastic lines are oversold or less than 20, we believe the bears are firmly in control of the market. And so the stochastic assessment line is going to be red. Between 20 and 80, this assessment is made by the location of the stochastic line with regards to the signal line. If both stochastic lines are above the signal line, then the stochastic assessment is green, and the line is going to be green. If both stochastic lines are below the signal line, then the stochastic assessment or the stochastic line is red. When both stochastic lines are not in agreement, the line is yellow. And we actually do an assessment of stochastic divergence, and I'll show you that later, and we universally ignore it. We have 150 traders in the trading room. They wanted to see stochastic divergence, so we left it in the assessment, but I just ignore it because I don't believe that divergence is reliable, and I think it fails a lot more times than it helps, than it's correct. So here now we have three forces, and we need them all aligned in order to take a short trade. Now, the first line is momentum, and the assessment of momentum is slightly more complex than I told you. And if anyone wants to know the more complex assessment, I'll be happy to tell them. So, but during those periods of time, that first line can be yellow, and we only need the second and third line red. But here's what we do to make this whole assessment easier. We project the results of the assessment right onto the candles. So you don't have to look at the three line, or look at the more complex momentum assessment we do. Because remember that MACD has 2 points that are of value. The first is when the momentum line is accelerating away or towards the signal line. The other is a MACD crossover. So the assessment is done for both of those. So to make it real simple, we just project the results directly onto the candle. So you don't even have to look at the three line to determine the appropriate direction to trade. It makes it super easy. You don't have to sit there with a crosshair on three lines. And remember, these assessments are changing intra-candle. So all that matters is going to be one thing. All you have to do is look at the candle halo outline. Now the halo, the color of the halo you determine. I like the halo to be blue on a green candle. You can make it darker green. You can make it whatever color you like and whatever thickness you like. And now you don't have to care about the three line because all you have to do is look at the candle body outline, and it's going to tell you the results of this indicator. And you can see right here in this one candle, you get this red, yellow, and the candle goes yellow, if you're in the trade, it's not necessarily a signal to leave. Except now you don't have to care. All you have to do is look at the candle body halo on a trade entry to tell you whether you have a trade or you don't have a trade, to tell you which direction the 3 line is aligned. When it's not aligned, the candle outline is black. You can also change that as well if you like to. Now we take it one step further. If the actual 3 line, well, I'll do that in a second, but here's the candle body halo. And you can see on this up candle, the 3 line has already turned to the downside. You can see it's already haloed in yellow. So the first down bar or the first down candle gives you a great short trade. Here, this is an up candle haloed in yellow. You take the roll to the downside. You have traders are trying to push this market up. Again, for whatever reason, I don't know, but they're right in the middle of a short trend. They've determined this is the bottom and that the price is not going to go down any further. And again, they're trading divergent signals, or they're trading Fibonacci support. All that matters, though, ultimately is the direction of money flow. And that's what we're looking for here. With order flow, stochastic, and momentum still aligned to the downside, you don't take this long candle. You wait for the market to roll and you go short. Now, here's the next step that we take, which you can elect to do if you want. We want the workspace to be as clean as possible because you're going to see that there's a couple of other indicators. And since we don't care what the 3 line is showing anymore, we only care about the candle halo, we can remove the 3 line, we can make it transparent, and then it's no longer even on the chart, or we can't see it anymore. All we care about is the candle halo color and what it's projecting. So we make it transparent and it disappears from the chart. And you're going to see on the live charts that I'm going to show you, I don't have a 3 line. It's transparent. So this is an entry because the 3 line is aligned to the upside. It's blue. So I take a long. I'm not going to take a short trade. And there's a lot of reasons for that. I'll show you later, even though the 3 lines aligned to the downside. We're looking for a long trade and we've got a long entry. And we're not going to take a short trade until the 3 line rolls. And right here is our entry short. We stay in the direction of order flow, stochastic, and momentum all the time. And it really lowers our risk substantially on a trade. Today, trading the live market, I traded the E-mini and the NASDAQ. We had 2 winners like that, 20 minutes, and we're done with $500 because I respected the direction of those 3 independent variables and how much of a difference they make on how price is going to move out into the future. Again, you have an entry short here. You do have an entry long. There's no short here because there's no candle halo. It doesn't make any difference if the trade went. It's a high risk entry. And our goal in trading is to eliminate risk. Now, when you trade with a lot of specificity, there are going to be some trades that work that you can't get in. That's the cost of having lots of trades that don't work that you sidestep. Here's another small long trade that worked, but here's the low risk, high reward entry. It's short in the direction of the overall trend. Now, this is one of the components that we use to signal a trading entry. So this is the first time we're talking about where you enter a trade, and we use an exponential oscillator. Now, in general, I'll show you the oscillator, it's right here. In general, using an exponential anything doesn't work well in the market. The market moves in an arithmetic manner, not as a second order power, a second order equation, which is why exponential moving averages are absurd. I don't know who invented them. invented them, but that person should be spanked. I mean, price moves on every financial instrument in a first order way. It doesn't move geometrically like that. It moves arithmetically. But the exponential oscillator moves quicker. And it really allows us to get trading entries, great trading entries. Now here is an oscillator entry long. Now you're going to generate a signal every time the oscillator line crosses the cyan signal line. When it crosses to the upside, you're going to get an up triangle. When it crosses to the downside, you're going to get a down triangle. Down triangle cross to the downside, up triangle cross to the upside, and so forth and so forth. Now, the only other rule that we have in trading is when you're above the 50, you can only trade long. And believe me, that's going to serve you well. When you're above the 50, the bulls are in control of the market. And when you're below the 50, the bears are in control of the market. Yes, you're going to have to leave some counter trend trades on the table. And some of those counter trend trades are going to be huge. But a lot of those counter trend trades are going to stop you out. And what we're looking to do is trade with a lot of specificity, not sensitivity. I personally never counter trend trade, although sometimes you're going to get nice counter trend signals. I don't take any of them. When I'm above the 50, I look for an oscillator signal with a blue halo to trade long. The pullback, I don't even touch. We get an oscillator signal long here on a blue halo. No trade. Here's our long trade with a blue 3 line signal long. Pullback, no trade, no 3 line, long, blue, and up. No trade short. 3 line is aligned to the upside. No trade here. No oscillator signal. Eventually it kicks in here. We have no entry, and there's our long entry right off the 50. Long with a blue halo. Now these signals here I wanted to remove, but the majority of traders in the room did not. These are simply overbought signals. They're blue triangles pointing down. And that's when the oscillator line crosses the 80 line to the upside or crosses the 20 line to the downside. You're going to get oversold signals. I don't take my oversold or overbought signals from an oscillator. Again, here's the same thing in the other direction. Short, down. 3 line, down. 3 line oscillator, down. 3 line oscillator, down. 3 line and the oscillator, down. I don't take the counter trend signals. These actually work. You have the 3 line aligned up, but I just don't counter trend trade. Below the 50, I always take the trades short. Now here, just to show you, just without making it really clear here, here's the oscillator line crossing the 50 line to the upside. There's the up triangle. There's it crossing to the downside. There's the down triangle. There's the oversold signals when it crosses below this 20 line, which I ignore. And there's the long signal, and there's the short signal. And I ignore these. Now I'm going to show you our dot system. And I'm going to show you it here before I show you it on a live chart, just to give you an idea of exactly what we're doing. Now, the dot system is available on most trading instruments. It's not available on 100% because it's a very, very complex assessment, but it really gives us incredibly good entries. It confirms the entry above and beyond the 3 line. So let's say that we're trading the E-mini, S&P 500, and we have an alignment on the 3 line. We also want to make sure that we're trading in a multi-time frame direction that the NASDAQ and the Russell are trading, since they all tend to trade in the same direction. So what we did, and I hope that's clear, if we want to take an E-mini trade long, would it be beneficial to do so if the Russell and the NASDAQ were heading short? And obviously the answer is no. And occasionally times will come up where you're going to get a long E-mini signal and the NASDAQ and the Russell are actually trading in the opposite direction. Now, if you take those trades, it's going to be associated with a significant amount of risk, and you're more than likely going to get stopped out on a separate assessment and a separate force that governs the future direction of price, and that is correlative markets. And a correlative market assessment is part of a small neural network. You just don't rely on the market that you're trading. You look at additional markets that correlate in direction. Now, the dot system is the darker the dot, the stronger the trend on the other instruments. The darker red or the maroon is a strong down, and the dark green is a strong up. And then you get lighter shades of green and lighter shades of red. So here's the system. Now, I just pulled these slides at random. And this is the E-mini. And this is the direction of the NASDAQ and the Russell. Now you can see on a multi-time frame basis, they're moving long as well with your long trade on the E-mini. And you're never going to counter trend trade the E-mini when the NASDAQ and the Russell are still going long. You're going to stay in the direction of these dots. Now, we obviously also need the 3-line. This is an additional assessment. But by creating, and this is a small neural network, because we're not just looking at one market to take our cue as to what direction to trade or when to get into a trade. We're looking at multiple markets. Now here's a short trade. And we want these dots on the entry. But what I wanted to highlight here is, see how the dots are lighter here? Then they get darker, because the trend on the NASDAQ and the Russell is intensifying to the downside. But then these dots stay with you on this move to the upside. So it's almost always going to fail. These are just buyers coming in. This is a 2-unit Renko or maybe a 4-unit Renko. So it pushes it up 8 ticks, but then it's going to roll back to the downside, and it's going to keep you from taking this trade. And it's going to validate the direction of the trade that you're going to take. You're taking a short trade on the E-mini, and the NASDAQ and the Russell on a multi-time frame basis are also trading to the downside. The likelihood of getting a winning trade is going to be extremely high. And here's the same thing again. Now you have the oscillator signal. On the entry, you have the NASDAQ and the Russell going long, and you want to take a long E-mini trade. The likelihood is very high that you're going to get a winner. You're not going to touch these counter trend candles. NASDAQ and the Russell won't allow you to do it. And when you get the next oscillator signal, you're going to simply go long again. Now, when there are no dots, remember how important it is to avoid chop. Chop is where most traders lose their account. There are no dots. The Russell is moving in one direction, the NASDAQ is moving in another direction, the E-mini is moving in a third direction. So this is when we stand aside, because we don't have an alignment of all of these markets. And if you're trading a system that's based on, this isn't a gigantic neural net that spans 10 or 15 markets, because I'm going to show you that later, because we do have that as well, and we do use it. But this small neural net that we have really helps you prevent losers. And here's another example. I could give you a ton of them, but here's your short trade. It's validated by a dot. It's a weak dot. It's a light color, but it's okay. You're going to take it short, but you have no long trade. And then your roll to the downside is on the dot. You have no long trade here because you have that dot. Keeps you focused in the correct direction. And that's all we're looking to do. And here you have no entry signals. There's no dots. On all these correlative markets are all trading in their own separate direction. And this is when there's no institutional money trading in the market. The market's going to move in random, chaotic fashion when there's no multi-time frame alignment of multiple markets in a neural net. And you can see, you get an oscillator signal short, and no way you would take it with a green dot above the candle. You get an oscillator signal long. Remember, you're right at the 50 line. So sometimes those oscillator signals, you'll get a short and then a long. Here's your trade to the long side and up. The market starts to chop. You lose the dots. There's no institutional money trading right now, and you simply stand aside. It really becomes much, much easier to avoid taking a loser. And that's our goal. It's to take low risk entries and avoid taking trades when all of these markets are moving in their own separate direction. You can see that the length of these moves is small. Now, in order to increase the success of the dot system, we use it on 2 time frames. Remember that 2 multiple unit Renko and 4 multiple unit Renko? Well, that's how we do the dot system as well. So now there's a faster tracking of the NASDAQ and Russell when you trade the E-mini and a slower. And you're going to see that the best trades take place when you have dual dots. When you have the fast and the slow, both the 2 multiple and 4 multiple Unirenko of the correlative market in this small neural net in your direction on the trade. You can take it with 1 dot. It's just a little bit riskier. And you can see it keeps you in the right direction. I took this slide right off of the software. I didn't move these dots around. And this gives you the ability to go short here. There's no long trade here. Here's your short trade. And here's your long trade if you're willing to take a slightly greater risk associated with only taking the long trade with the faster dot and the slower dot not having appeared yet. We call these dots, even though one's a dot and one's an X, because just for simplicity. And here it is again. The dual dots to the downside, to the upside, both dots to the downside. On the entry, nothing here. On the short trade, nothing here. On the long trade, just the faster dot. And on the long trade here, just the faster dot. And we're going to look at this on live markets. Here's another example. And you're going to see it becomes very, very simple to assess. Long and short. Now, these aren't really great examples on these slides because you really want the entries or the dots on the entry candle. You don't have them here. Now, let's put the dots and the 3-line indicator together. So here's an entry. You have the dot, and this is just the 1 dot system. This is not the dual dot. And you can see now you have the 3-line, and you have the correlative markets with you on the trade, and this is a very, very low risk entry long. Yeah, even though you have a 3-line aligned to the upside here, then this small neural net telling you that the correlative markets are still trending down keeps you from taking the counter trend. And then you just roll to the downside. Even though you have no entry here, you still need the 3-line to take an entry. You don't have one here, you can't trade. The dot alone is not enough. You must have the 3-line on a trading entry. Every time I try to take a trade without that 3-line, it wind up blowing up in my face. And here's your long trade. You only have 1 dot. This is the faster dot. but you can see the 3 line is aligned to the upside, and you can take it. Up you go. And it's unusual, but here on the reversal, you have the 3 line and both dots. So this is an acceptable trade. And here long, you have the 3 line and you have the faster dot and you have a long trade. And again, this prevents you from trading in the wrong direction. You're in long here. You're not going to take this counter trend candle. If you hit your first target, you've made money, but you're not going to try to take this candle or trade this trade short. Not only is the 3 line aligned to the upside, you've got a green dot and you have to trade long. Here, you have no short trade, no 3 line. And the candles can be different colors. When you trade, you don't trade. You have no trade. Here's your perfect trade. The 3 line, both dots, whoops, both dots are green. And there's your perfect low risk, high reward entry. So you have to sidestep some chop and you have to sidestep some entries that are associated with slightly greater risk. Once in a blue moon, I'll take them. If I have the 3 line in 1 dot, but that's your perfect trade and that's your perfect entry. I'm going to show you on live charts how well this entry does with an associated oscillator signal, and we have a couple of other signals. So now we have a very, very large neural net, and that's our money flow indicator, and it's the most sophisticated indicator we have. And if you've noticed so far, we do not use a single indicator that assesses price from your trading chart. They either assess other time frames or they assess other markets. Now, the money flow indicator, it looks at multiple correlative markets, and they're optimized to determine money flow direction on that individual market. It takes a long time for us to come up with one. But when we get them and we get them right, they're incredibly helpful. Now, this is assessing 9 markets, 3 in each line. And this is the E-mini. If you see that we're layering things on here, it's because really we consider our mandate for you to be able to see the lowest risk trades possible. Now, the other thing you can see is the risk associated with every trade. Every now and then, everybody has a different risk tolerance. You may want to take a trade that doesn't have every single independent variable associated with the trading entry, and you're going to get a winner as long as you understand that that entry is slightly higher risk. If you want to just stick with the lowest risk trades possible, it's a great way to trade, and it's pretty much the way that I trade. Because I have so many people in the room that take my trades, I wind up getting indigestion if I take a loser, and I feel a lot of responsibility, so I don't extend out risk at all. Now, there's 3 markets in each of these lines. Now, it doesn't make any difference what this instrument is. So it's going to be impossible here to tell you what these 3 markets are in each line, because what they are is not really that germane. The most important thing to know is in these 3 lines are certain markets that rise when this instrument falls and that fall when this instrument falls. And that's what a neural net is. It knows multiple other instruments that either trade in the direction of the instrument or trade in the counter trend direction to the instrument. And they do it with a correlation coefficient of 0.7 or greater. And that 0.7 is simply 70% of the time, the markets are going to trade in the direction they should when this instrument falls. And really what we're ultimately trying to do is there's no way that you can tell when how institutional traders are applying their money. But this is the best way to try and track that footprint of institutional money. Because what this does is it looks in the course of a given day, the amount of money in all the financial markets is fixed for the most part. Over the course of time, large mutual funds and large institutions will reduce some of their money to cash, and they'll trade less. But from 4:30, from 9:30 in the morning until 4 o'clock in the afternoon, the amount of money is pretty much the same. All they do is they move their money from asset class to asset class, depending upon risk. And that's what we're tracking here. When Trump says something that unnerves the market, they quickly move from out of stocks and into financial instruments that are safer, like bonds, like notes, like precious metals, like certain currencies. And that's what we track here. And if you're trading a stock, we do the same thing. We track the correlative markets to stocks. There's correlative lines for the NASDAQ, the Russell, the E-mini, and the Dow. So the most important line is the middle line, because these have the markets that correlate with a higher correlation coefficient. So on an entry on this particular market, the reason I outlined it is because we want that middle line to be with us on the trade. We want the dual dots, we want an entry signal, we want the 3 line, and at the very least, we want that middle line with us on the trade. If we have all of that, the likelihood of getting nailed and chopped is extremely low. Now here's an entry, and you can see that middle line is green. Now we also have the upper line and the lower line, and we call this the major, the intermediate, and the minor. Why, I don't know. We call them lines 1, 2, and 3. It doesn't matter. But it's that middle line that's the most important line, and we want it to be green on the entry. And again, it prevents us from taking these false counter trend trades. And remember, there's a lot of traders in these 2 candles going short, and we don't want to be in with them. What we want to do is run them over and force them to stop out. And as they stop out, they have to buy their shares back or buy their contracts back, and they help push the market long. And here's CHOP as defined by our quant lines. We call them quant lines because each of the markets are they're quantitatively weighted based on the correlation coefficient. So we have another way of assessing CHOP. No 3 line, no dual dots, and no alignment of our money flow line. So if we put it all together, here's the entry. Here's the kind of entry that we're looking for. We're looking for a short trade right here. Here's the oscillator. The middle line is critical. We've got the 3 line. We're shorting this trade below the 50, and down we go. And we can actually take this as a rollover if this reversal candle knocks us out. And our automated trade management strategy will take us out on a reversal candle. We just go right back in and down. No way we're going to go long here. We've got the 3 line. You can see the halo. We go short, roll, and short. Here's another example. Now, here's an entry without dots. So it is much riskier. This is a counter trend trade, and we don't take it. I think this is only when we have the single dot system, not the dual dot. So this 1 dot gives us our long with the 3 line, with that middle line, which is our money flow indicator. We have it here, but we don't have the 3 lines. So we have no trade. We have a small trade here, and here we've got nothing but CHOP. We have no dots. Here's a 4 contracts. It's a $3,800 60 trade. But again, the size of the trade is irrelevant. All that matters is that you consistently get winners. Even if they're singles, the key to winning is to avoid losers. That's what makes you a successful, profitable trader. And this can be traded on any time frame. So it doesn't make any difference whether you want to swing trade this, swing trade a stock and enter an option. It makes no difference. And here's a long trade. I'm going to show you this on a live chart. Just don't want to show you this because of the fact that I can show you any kind of JPEGs I like. I want to show you a live market. And I'll show you a few live markets if you like. Here's the dot. Here's the 3 line. You're long. Now, you can take this as a counter trend trade, only I wouldn't do it. And it goes down to here on the long trade. You have no trade. You're not going to trade long below the 50. And here you have no dots to verify this trade short. And you also have no intermediate 3 line, this middle line here. So this is the one low risk, high reward trade on the chart right here. Everything else is associated with a little bit more risk. Now here's the E-mini on a big time frame. And you can see here's your trade, this continuation short. Here's your continuation short, and you have no long. Now on the entry here, you don't have dual dots. You don't have the intermediate. So you can't take the short trade. You have to wait for the market to roll to the upside and then take the roll down. Go up, roll back to the downside. As long as you have the dual dots and you have the 3 line. It really is actually rather simple to read this. Now there's one other indicator. I don't want to frighten people away because our goal here is to really give you a really low risk entry. This is the multi-time frame assessment of the E-mini. You also want to trade the E-mini when it is in a multi-time frame direction. And this is pink because the 2 higher Renko timeframes are pointed to the downside. So we look at a multi-time frame assessment of everything: order flow, stochastic, momentum, correlative markets. These are correlative markets, but this is a small neural net. This is on the E-mini, this is the NASDAQ and the Russell. And we look at the multi-time frame assessment of the E-mini. And I'll tell you, this is the most powerful independent variable there is. You don't want to trade without the instrument you're trading being in a multi-time frame alignment. When you have this clear area here where there's no multi-time frame alignment of the instrument you're trading, it becomes very hazardous to trade. And I very rarely do it. I'm going to show you that on a live chart. Now I don't want to wear you out on these, but here's another great trade long: dual dots, oscillator signal. Another great trade long: dual dots, oscillator. Another dual dots, oscillator. Now we don't have money flow, that middle line here on some of these entries. So they're not perfect entries. So I do want to warn you on that. Oh, this is the DAX. The DAX, we trade differently. You only need the first and third line. So this is an entry here. Here, first and third line, there's an entry. And these are the correlative markets to the DAX. They're moving in the direction we want them to. Here's our small neural net, and here's our big one. And we want to trade in the multi-time frame direction of the DAX. Each of these up colors has different power. The darker green is the most powerful up. The lighter blue is a much weaker up. But you're trading in the direction of the multi-time frame movement of the DAX. Here's gold. Again, multi-time frame. This is the correlative markets that assess money flow. There's the dual dots. That's an actual entry. and short with the 3 line down. And here you have a mess. You have an entry here, but that's it. In here you have nothing. Here there's clear, and here you don't have 2 quant lines, and you have no trades here. All of these signals are useless without money flow. And here is the NQ. The NQ is a real lucrative instrument to trade if you can avoid chop. And this is a real beautiful short trade. No long trade. Roll to the downside. No long trade. Roll to the downside. I mean, you can rack up a lot of money on the NASDAQ if you avoid the chop trades or the counter trend trades. You're trading in the direction of the multi-time frame of the NASDAQ. Your 2 higher unit Renkos are heading down, and you're going to trade in that direction with the 3 line, with money flow, optimally with an oscillator signal. This is our big neural net, and here's our small, and it helps immensely. Now, I'm going to show you what the offer is, and then I'm going to go to a live chart. Normally, the system is $29.99 for a lifetime license. Right now, it's $13.99, and I want to tell you all the additional stuff we threw in for the webinar. First of all, right now we do trade stocks. I just forgot to type it in. We have crude, we have the E-mini, we have the YM, we have the NQ, we have gold, we have the DAX, and we have stocks. As we get add-on markets, you're going to get those for free. Normally, we charge you as we add on markets because they're very difficult to configure, because we actually have to create a small neural net for each of these individual markets. They're going to blow up. Now, I had the Forex down here, but the Forex actually got moved up here because I'm sorry, the Forex is coming with the 6E, the 6A, the 6C, Forex, bonds, and notes within the next week and a half, and you're going to get all those markets as well. And if you're one of the first 5 orders, you also come in with me in the live trading room. Even if you don't trade the instruments that I trade, you're going to learn how to trade the system walking backwards. You're going to see the configuration of a low risk, high reward trade. And by the time you're done, you're going to be able to trade it with your eyes closed. You're actually going to be able to trade it with your eyes closed in a week. But if you're with me in a month, you're going to get a lot of education. Then you get a 10 module weekly educational training. Which we charge almost $1,000 for, and our video tutorial library, which has 450 videos in it. Now I'm going to take, this is our, whoops, that's for a separate offer, and I just stuck that. Let me just show you our one more time, and then I'm going to show you some live charts. Whoops. Here's our number, 786-713-5276. And here is our email, info@rightlinetrading.com. And I'll just show the offer one last time, and then we're going to go to some live charts. Right here, $13.99 with all the add-on markets, all the upgrades for life, and the trading room and all the educational stuff. I'm going to take these off, and I'm going to bring up the markets. Hopefully they haven't vanished off my chart. Hang on one second here. Okay, now these are our live markets. Now, the first one I can show you is the NQ. I'll show you any market you like. And in a second, I'm going to look at questions. And if you have a specific market or a specific stock you'd like to see, I'd be more than happy to show it to you. You can see it looks very much like the slides I showed you. Now in the NQ, we must have this middle line. That's our money flow line right here. Optimally, we want to trade with background bias. Now here we don't have it, but this is a stellar entry right here. And the reason is you're trading right off of support. This yellow line I didn't mention, but this is the volume weighted average price, or the VWAP. It's a strong area of support. Price comes down and you're looking for a long trade. They don't have the dual dots. So this is a little more iffy a trade. Now here you don't have money flow aligning. Let's go to the morning. I don't want to take a trade after market hours. And I'll show you the trade that I took this morning. Okay. Now right here is your entry. Now I just want to tell you, the thing that we can do is when we get a wick, an up wick on a down move, it shows that the bulls have tried to push this market all the way up and could not manage to get a reversal candle. And this is a bull failure. So we can enter when the market pushes a wick on a Renko. It's a very low risk and very effective trade. And this is the trade I took right here. And this went down just like that. And that was a perfect entry. Now, I didn't take another trade because the other trade I had was a very, very big winner on the right here. The 3 line is not aligned. Here you don't have the dots. Here's your next trade right here. You have both dots. You have the 3 line. You have this intermediate. You have green background bias. You don't have a huge winner, but this is a first target. This is a 4 Renko. That's a lot of ticks. I'll scale it for you. It's 6.25 points from entry to highest movement. That's not a small move. And you don't have any long trade here. There's no trade here, and I don't count your trend trade. And here's your short trade. You see it pop the wick right here. Now the one thing we don't have is this intermediate, so we can't take this trade. Like I said, you're going to have to sidestep some winners, and in order, here's your trade right here. Now the only thing is you're trading into support, so you have to make a decision whether the market's going to break it right here. But you've got dual dots, you've got the 3 line, you've got your intermediate, you've got your background bias. Now, I would have taken this trade short. Now right here at 1306 is where you have a loser. But I watched the markets today. By 1306, volume had died. This is where you have all your volume right here. And I'll show you the E-mini. And I'll show you our trade. I took the trade, a slightly risky trade. I took the trade right here. I didn't have background bias, but I had my intermediate line, which I need. I had my 3 line, which I needed. I had both dots, which I want. And I had the 3 line, and I was trading right off the VWAP, a great area of support. And there was my long trade. Now this is maximum excursion. It was 3 3/4 points, and that was it. The NASDAQ trade in this trade gave us on 2 contracts $495. So when we make that much money on 2 trades, we're going to stop. Now we didn't have an entry here. There was no 3 line. We had no entry here. There was no 3 line. I was still in the room. I was looking for a potential 3rd winner. There was no 3 line. Nothing was aligning. Look at the red dots above. This trade went, but it's a very risky entry. And so did this one. And I kept pointing at every single oscillator entry worked. Up, up, up. But they're just on the right edge. They're risky to take. Then I closed. So I don't know exactly what happened later on. But that's your short trade. And here's the other indicator we have. This is called the revolutions indicator because we couldn't think of another word for it. But this is a smart indicator. It looks at almost every other independent variable and makes an assessment of all the things we discussed. And if you have 80 to 90% of what you need, you take the trade. It's a very smart indicator, and you don't see it often. And it gave you a winner here. Here's a trade. We have our first target was 1 point, and that's a winner. And here's 1600 hours. Now, this would be your last trade, and it's a perfect entry. Now I'll show you. Why don't I look at questions before I start to go into other markets? Because I'm sure people have questions. I mean, here's crude, and crude has that. Well, that's the end of the day. Here's that entry, that revolutions entry. It's very accurate and long. I'm just going to show you those really quickly because well over 80% of them work. That's a winner at a 5-tick first target. Look at that entry. Long. Everything's there that you need for the trade. This comes in intra-candle and it blows this trade up. Now there's great trades I'm passing by. I just want to show you this indicator. There's another winner. There's another winner. I'm not skipping anything. There's another winner. 5-tick first target on crude. Now here's a loser. Here's another winner. Now we have this operational on crude and the E-mini. And we're eventually going to have it operational on every market and on every stock. It's very difficult to program because it requires all of those independent variables in its algorithm. And you can see how accurate it is. It's obviously not perfect. You're going to get losers in this system, but the losers are going to be very rare. And let me answer any questions. I want to hold off on that too much, and there's a lot of them. Hang on 1 second, and I'll answer them. Okay, Steve asks, how do you decide to get out? No more dot. Here's what we do, Steve. What we do is we have an optimized automated trade management strategy. It's called an ATM, and we base that on the volatility of the instrument. Like on the E-mini, we take a first target of 4 ticks. And we lose a contract. We take a second target of 7 and a third target of 14 ticks. So we slowly scale out of the trade, and this ATM works really, really well. On the NASDAQ, we take our first target at 20, our second target at 30, and our third target at 40 ticks. So it's just all preset. And we're on a trailer, a 25-tick trailer. So once the trade hits, we let the ATM manage the trade on its own. Every time I interfere with the ATM, try to pull the stop closer, I wind up costing us money. So we have that for every market that we trade. Now, I'll just tell you that, because that's a great question. How do you get out of the trade? How do you manage it? I just want to show you this. The DAX is the bet. We're going to start, I know it's going to be very difficult on me, but we're going to start a DAX day. And one night, I'm going to get up at 3 o'clock in the morning and we're going to trade the DAX. It's $12.50 a tick. And I've never seen an instrument trade as well as this does. It's amazing how many winners you get on the DAX. Look right here. There's a winner. There's a winner. There's a winner. You don't have the 3 line. You don't have the 3 line. There's a winner. You get incredible winners on the DAX. I mean, you can make $1,000 a day here, and you very, very rarely get a loser. It trades real smoothly. And I go over the DAX every day with everyone in the room. And it's the best trading instrument, best market I've seen. Let me keep going here. The entries were Lamont. If you have everything aligned, and the problem with a lot of day traders is they don't have patience, and swing traders too. They want to get in on every winner. It's FOMO. It's that fear of missing out. If you wait till you get those low risk entries, they're going to work for you. They're not going to work 100% of the time, but they're going to work 80% of the time. And I'm going to let you in on one secret, that when you trade the NASDAQ and you trade the E-mini, you have to have the background bias the same. You have to look for yourself, and this is the only way it's going to happen. You want the E-mini to be pointed down and the NASDAQ to be pointed down on a multi-time frame basis. And it's really easy to do. You don't want to take a long trade when the NASDAQ is heading down. Now, the dots and the quants help protect you, or the money flow indicator, but that's your ultimate way of protecting yourself. And it works terrific. And you don't have to trade what I trade in the room. Some people trade the Dow, and I've got the Dow here. And I can show you the Dow today real quickly. Look at this trade at the open. Now at the open here, that 3 line was aligned. I'm not going to get into the problems with NinjaTrader, but when you open and close your charts, it does move the color. You have to close the chart and reopen, and it's going to shift your color to the right, 1 candle. Now they say it's our fault and we think it's theirs. I don't want to argue with them, and I don't want to get them pissed at me. But this was a 3-line alignment all the way up on the Dow. It's the only trade of the day, and it was a very lucrative trade. Well, we don't repaint anything in a live market. Just want you to know that. I see that, Lamont. No, you can come to the trading room for, it's $149 a month. If you don't want the indicator system, you just want to take my trades, it's $149. Okay, Steve, you live in Australia. Would it be your nighttime when I can trade? Absolutely. Steve, as long, we have 2 volume indicators, because volume's really important. This volume indicator here shows you the total contracts crossing in the entire session. This volume indicator here shows you the number of contracts crossing per minute. So we want an absolute assessment of volume. Those volume indicators that you see are useless. And I don't want to stick one in, because what they do is they have 2 independent variables. One is how long does the candle take to form, and how much volume accumulates under the candle. If the candle takes a long time to form, it's going to look like a volume spike, but it really isn't. I mean, sometimes it'll take 3 or 4 minutes for a Renko candle to form. Other times, or any candle, other times it'll take 3 seconds. Here's our absolute assessment of volume per minute. And we'll tell you how many contracts per minute you need to trade it safely. And if that number's too low, you're going to stand down. Now, in Australia, you'd have a great opportunity to trade the DAX, and the DAX is a killer instrument. I mean, I'm going to trade it 1 day a week, and I'm going to get up at like 2:30 in the morning, and I'm going to trade the DAX from 3 a.m. until about 7 a.m. Eastern. Then I'm going to sleep for an hour or 2, and then I'm going to trade the other markets. because the DAX is so lucrative. Everybody's been screaming for a DAX day. So I like the DAX when the American markets are closed. All the Europeans and all the Asians, they trade the DAX, and everyone in Australia trades the DAX. Once the American markets open, volume starts to split up. So the DAX is the killer market in the middle of the night, DAX and Forex. Yes, Tom. And it's yes, and it's only available on Ninja. And we have it on Ninja 7 and Ninja 8. Okay, Lamont, if I was to go out on my own without the training room, do the charts require? None. And what we do is Lamont, we do the full system configuration. We have Sergio here who has a master's degree in computer programming. He's a small genius. And anytime, as long as we're alive, if you have any problem with your software, we'll fix it for you. And remember, if you're one of the 5, you get lifetime upgrades and add-ons. Even if you're not one of the 5, if you ever have a problem with it, you just give us a call, send us an email, and what Sergio does is he logs onto your computer and he'll fix it for you. So don't worry about that, because there's a lot going on here. But the system is very, very reliable. He'll set it up for you and he'll configure everything for you. And he won't let you off until everything is perfect. And we have templates for every market. So those templates, whoops, I brought up the wrong thing here, are going to give you all the inputs for all the indicators. But if there's any problem, you're going to load these indicators, all these templates. I have so many. I mean, you're going to get drowned. But here's our Renkos: crude, DAX, E-mini, Forex, gold, NASDAQ, YM. We have a ton of templates, and that's going to give you all the indicator inputs. Because I'm a technical idiot. I mean, honestly, I mean, he's the tech guy, and I don't even try to work on any tech. It's enough for me just to trade. And I don't want to have to also put on my head, you know, the burden of having to technically support this platform. I don't do it. So listen, those are all the questions with Lamont's question. Don't worry about any maintenance, Lamont. We will take care of that for you. And if anything happens in the course, we'll take care of that. And as we expand the system, and we will, you're to get all the add-on markets and all the upgrades. And we have a list, and every time we have a new package, we send it out to you. No, it's a zip file. You should be able to stick it in real easily, but if you can't, just let us know, and Sergio will log on and he'll configure it for you. So listen, everyone, thank you so much for your time. This system, I'm telling you, will make you money. I trade it every single morning, and we make money most mornings. I don't make money every morning. I'm not going to make that representation, but we are consistently profitable, and that's the name of the game. And this system allows me to easily sidestep chop. And I like to trade in the morning when volume is high. And this morning, this trade was at 9:33. That went 3 3/4 points. I didn't get all of them. And we got this really nice trade on the NASDAQ short right here. And one made 250 and one made 240, and I had 490 on 2 trades, and I was done at 9:51 in the morning. And I stayed in the market looking for a third perfect trade, but it just didn't materialize. This was my best candidate right here, but it just didn't configure perfectly. I like this pullback, this wick down to the VWAP and the open, 2 strong areas of support. I didn't have that intermediate. I didn't have the 3 line, and the trade worked anyway. But you're going to have to tolerate letting some winners go in order to avoid taking all the losers. So listen, everyone, have a great sure, everyone's going to get a copy of the recording, Clive. So get a copy of the webinar. So listen, everyone, have a really great evening. I wish you all the best of luck. We're the small guy. Look, it's up to us. We want to take the monies from the other small guy. We want to trade with the institutional guys. We can never beat them. Our goal is to be on board with them, fighting the other small trader who's trading a broken system. You know, divergence, fibs, stuff that just doesn't work, trading lagging indicators. Those are the only people we can take money from. And look, you know, it's a tough world out there when you're a trader. That's what we have to do, and that's what our goal is every day. So thank you all again, and best of luck. We're the small guy. Let's all make some money. Take care, everyone, and have a great evening. And thank you so much for your time. I really appreciate it. Bye-bye all.